In September 2008, the world's financial system came within days of total collapse. Here's the warning almost everyone chose to ignore. It started years earlier with something that sounded harmless: more people buying homes. Through the early 2000s, American house prices climbed, and banks were eager to lend. Banks began approving home loans for people who, under normal standards, couldn't actually afford them. These were called subprime mortgages, loans given to borrowers with poor credit, often with little verification of income at all. Here's the part that turned a lending problem into a global crisis. Banks bundled thousands of these risky mortgages together into complex investment products and sold them to investors all over the world as safe. For years it worked. Home prices kept rising, so even risky borrowers could refinance or sell before defaulting. The system looked stable right up until it wasn't. Around 2006, home prices stopped climbing and started falling. Suddenly, millions of those risky borrowers couldn't refinance their way out of trouble. Defaults began rising fast. By 2007, the cracks were showing. A wave of subprime lenders collapsed, but the real shock was still ahead, hidden inside the very banks everyone trusted most. Lehman Brothers was a 158-year-old investment bank, one of the most respected names on Wall Street. It had quietly loaded itself with these same toxic mortgage investments. On September 15, 2008, Lehman Brothers filed for bankruptcy. It remains the largest bankruptcy filing in American history, involving more than $600 billion in assets. The Dow Jones dropped over 500 points that day, one of the worst single-day crashes since 9/11. But this wasn't just one company failing. It signaled that no institution, however old or trusted, was safe. Banks stopped trusting each other almost overnight. Credit, the thing every business depends on to function day to day, essentially froze worldwide. Governments were forced into massive emergency interventions, injecting hundreds of billions of dollars just to keep the financial system from collapsing entirely. The fallout lasted years. Millions of people lost jobs, homes, and savings in what became the worst global recession since the Great Depression. The warning signs were there for anyone willing to look: unsustainable lending, complex products nobody fully understood, and a belief that housing prices could only go up. Nearly everyone chose to believe it anyway. Follow for more stories about the moments the world almost broke.